We had ourselves quite the down day. I want to thank everybody that came to my live stream. Just so you know, I am planning, I'm going to try my best to do a live stream tomorrow, most likely right at about 9 a.m. Pacific Standard Time, so at 12 Eastern Standard Time. I'll try to do it earlier if I can, but that's going to be right in and around that time. We did get quite a bit of sell side, a lot of volatility in today's trading session. We're going to dive into all of that. We're going to revisit the mega cap names. We're going to look at just all types of stuff to get a really good idea as to what we can expect going into the remainder of the week and potentially further out. We do got one more trading week. If you like this type of content, make sure to subscribe to the channel. This is the Stock Market Brief Show, where we navigate the financial markets through the lens of technical and intermarket analysis. Interesting stuff that came out today. I thought this was more funny than anything. I mean, not necessarily funny, but the next chart is, but we did have Burry. There's a letter going out to his investors saying that he's planning on liquidating his fund. I don't know necessarily if this is true or not, but apparently it's dated October 27th, 2025. And somebody on Twitter posted this. I thought this was kind of interesting that you have Tom Lee down here apologizing for being too bullish to investors. And then right up here, you have Michael Burry shutting down, which, he's known for the big short. And, what if, we're at all-time highs and the market's coming down right when he closes, and we got the most bullish guy in town apologizing for being too bullish right at the exact bottom. We do have more Hindenburg Omens continuing to cluster. Subu Traded put this out, that we just had our fifth one in a very short period of time. These are known to be potential, warning signs of the markets. And really the market's just been consolidating. It is still really bullish, right? We're just getting more volatility. And I'm going to break down more the structure and the conditions of the market and what you can actually expect to happen given these market conditions. If you look at the heat map, yep, we had Tesla down almost 7% on the day, Nvidia down almost 4%. Broadcom was down around, it's only 4%, but it's off the lows a little bit there. Apple was relatively flat for the day. Amazon down about 3%. So yeah, when you have days like this, that's going to put a huge drag on the market. There's a lot of red on the screen. Healthcare kind of led the way. They've been, ripping up higher and higher, so that's been a positive sign. Out of the 11 sectors that make up the S&P 500, consumer staples, energy up there, you had healthcare, some more defensive posturing taking place, and this was a big down day. We haven't seen these for a while, and by big, I mean it was over a 2-standard deviation move, and I'll show you what that looks like in a moment. But the S&P 500 was down pretty much at the lows, closing 1.6% down. The IWM, so the small caps S&P 600 down 2%. So those took one of the largest hits there. And then we had the Nasdaq Composite as well, pretty broad market, down 2.29%. Now, if you're wondering, what's going on, what's happening, why was that big of a sell side? First and foremost, if you watch market net flow is the cumulative net premiums of puts and calls. And for basically the bulk of the day, right through and around since the beginning, we started to see the increase here in cumulative net premiums of puts and the decrease in the calls. And right there was a little bit of a warning sign. And then we started to gain convergence. And all that tells us right then and there is price of SPY is moving with the flow of the market, and it was just bearish basically throughout the entire trading session. You can see over here that we did break down from the 5-day moving average and all of these VWAPs that we've been discussing. I'll show you an updated chart with the new expected moves here momentarily, but I wanted to point out these are the 2-standard deviation move between the eyeball range and the daily expected move. And you can see that we came down and we closed within this range, but outside of the options priced in 2-standard deviation move. So it was a big move nonetheless. Going into tomorrow's trading session, you can see that we have our daily implied move up here at about 677, 678. And then we also have it down here to around 666 and 665. So if we get some more continued sell side, I'd be watching at these lower levels. And if we start to bounce up, just pay attention now. You are below a 5-day moving average. You're below the November VWAP. You're below the all-time high VWAP. You're below the November low VWAP. So if it does come back within here, it might take some sideways consolidation or some significant strength to break back through those levels. Okay, we need price to really prove itself. And when we see these 2-standard deviation moves, if you're in the Discord, you know that you got hit with just a bunch, and we did this also on the live stream, of alerts. And these are all names, and this isn't even all of them, but these are just weekly options that were hitting daily 2-standard deviation moves. So I pulled one out of the group here, and you can see this is a more popular name like Palantir. The eyeball range for the 2-standard deviation came at this time right over here at 170, 171. And you can see when it gets to these levels, this is why I like these alerts so much. If you're in the Discord, is once you see significant breaks of 2-standard deviations, and they're pretty popular names, you can look to try to trade intraday back through to it, maybe even to the daily VWAP. A lot of these names closed underneath the 2-standard deviation move. But a lot of these names, I should also add, they were in bullish context. So for example, like Palantir, it's been down for 2 days, pretty strongly down 2 days in a row. And when you see these hits of these lower 2-standard deviation moves, if you're a swing trader, if you're bullish, right, you can use these exaggerated moves to start to scale in, because you typically, after strong moves to the downside, you get sometimes bounces, and you can just kind of strategically position size utilizing tools like this. If you want to take a look at it, it's 16 bucks a month. It includes all types of stuff, including the Asher alerts, which are these weekly, daily, monthly alerts. You get to manually type in for various ranges for the day, week, month, or historic ones. You get premium discounts, all types of cool stuff. Go check it out, $16 a month, or it's even cheaper if you just buy the year. Let's continue on. Now, today was a big down day, but like, just how dramatic was it? So I pulled up a little fib from this low to this prior swing high. I want to call out that this perhaps could be a lower high in the S&P 500, but we still do have a higher low, okay? And as we move from this low here, which is basically the month-to-date range of risk that the market's priced in, we came up, and what are we doing? We're pulling back into the 50 to 61.8% retracement level, also known as more of the golden zone. Now, we closed near the lows of the trading session, right? So it's typical to break the low when you get this close, or we're having an inside trading day. If we start to break the high, like say tomorrow, chances are it's on some back of some sort of news, which we do have some news coming out tomorrow around macro stuff. So what really drove just the consistent selling other than market net flow? We went into negative gamma. So in yesterday's video, we talked about, hey, when we cross under the flip line or get near it, expect volatility to rise. So you can see over here, this blue bar just tells us that we're underneath the gamma flip line. We closed under there. And what happens when you get under these, you can potentially have vol control funds sell. And this can add in even more volatility into this market or to the sell side that you witnessed today in equity. So we saw that downtick a little bit. I didn't get the update there on CTAs yet, but CTAs will join the party if we really do start breaking some key levels. Now, overall, the gamma flip line rate is now at about 67.40. We're right below it. So, we're more in a neutral zone. So you got to be careful if we do start breaking down. Volatility is set to really take off. And as soon as we actually cross down through that intraday, we cross down through the gamma flip line right in and around this area. We started doodling and around in it. But when we substantially broke from it, look what volatility did. Volatility took off like a rocket ship, right? This is why I always say it's so important to watch where the gamma flip line is and where the S&P 500 is trading with it, because you'll get selling into selling, buying into buying, and you get much more bigger volatile price swings. And you can see over here, the gray boxes are highlighting the periods in time where the S&P 500 fell underneath that gamma flip line. And, there's been times where it goes underneath it and gives us a warning shot to saying, hey, you might want to change up your strategy a little bit here and let the market cool off. And look, it stayed in negative gamma, boom, to a VIX spike up to 60, okay? So that's why the strategy typically changes, and your position sizing should change and adjust when market conditions change. Now, there's been many days that we've seen 1 or 2 day pops below the gamma flip line, and it leads to a little vol spike and hasn't led to anything else. But it's just still a warning shot that the longer we stay below there, we could see volatility do something, like that, perhaps, right? We can't, call for that, but we do see volatility has been increasing. Today, we saw it flip under the gamma flip line. So we'll see now if we can start to, get back into more positive gamma in the near future. I will say, from a volatility perspective, looking at the VIX futures curve or the volatility futures curve, it is not in backwardation. We're still in contango. So this is not necessarily a bad sign for markets. It's nothing crazy. And when we look at back month versus front month, we're not down here at a 1.0 reading, which, typically marks bottoms or, areas where price consolidates. And we're not at an extended level up here by any means too, from a more bullish perspective. So not much of a reading on that chart. If we take a look at the cues on the 30-minute time frame, yesterday we were talking about how, be more careful if it breaks underneath this VWAP, be more, bullish, obviously, if we can hold above it and consolidate. Well, we broke down from it, and the 5-day moving average continued to descend. Okay, so we're still below that. If you want to be patient, right, give it time. Let us see what happens and let the market prove itself that it's not something more, bigger taking place, more to the downside. If we take a look at the semiconductors, also broke underneath that VWAP. The declining 5-day moving average continues. So if you want to be patient, wait for price to prove itself. And or if you're trying to buy dips, you can always look down to lower weekly implied moves, daily implied moves, or something like that to buy outside of what the markets expect. Okay, if we get to the IWM did crack underneath its 5-day moving average and the lower VWAP as well. Right? Those are times to be more careful. And it just saw some continuous selling all throughout the day, broke to another little low over here. And we still haven't tagged the week to date volume weighted average price. So any move back in these prices, remember, like that would be, an exciting move back. But remember, you'd still be, I could remove this one now because there's a new low, but you'd still be under the declining 5-day moving average. So you'd still need price to put in a higher low, to consolidate, to set back up and get back above a rising or flattening 5-day moving average. If you look at the DIA, this was almost too obvious. We knew that this trend was going to break. These type of steep moves like this, they eventually break. And well, now we saw another, we saw the break. Now it's pulling into the 5-day moving average. It's currently below it. It is inclining. But now this is also another steep trend line. So we came back into the weekly implied move. So if we start breaking out from it, maybe see we get some consolidation, start to head higher. But if we break lower, just be aware if this starts flattening out, right, and it starts to hold as resistance and breaks lower. We don't know that yet, but we saw some extreme strength, and now we're pulling back and consolidating that move like the rest of the market is, not just the DI. Biotech is above its rising 5-day moving average, so this is showing more relative strength here. And if we go to the low here in November, we're actually still above that. So Biotech still looks pretty healthy, right? Maybe we can consolidate a little bit here, maybe tighten up a little bit, and then we start to, potentially break out and head further. If it starts to break down from these levels, right, and then starts to flatten out, stay away from it. You want to see this base out, flag out, and then see some strength to feel a lot more confident in your take here on one of these trades. If we look at oil was slightly up on the day. It started up higher, then closed basically at the lows, so which is interesting because we really saw a pretty big break in bonds. That was minus almost 1% there. So if oil is going to continue its descent, downwards, I still think that this is going to be bullish for bonds. So you could take advantage of moves down in bonds, right? That's would be my take. If oil is going to go lower, I'd still continue to be looking at extended moves to the downside in bonds. You'd maybe sell, higher moves. And for example, right, if you just go back to these videos, right? If you go back to my video on this specific day here, I probably said it could be a good area to short bonds or start to take some off for profits. And the reason why I said that was there's a couple reasons, because oil was breaking down at the time, oil looked like it could potentially bounce at the time, which could be bad for the bond market. So yeah, now we're just pulling back, right? We're pulling back, we're consolidating. Dollar was down slightly too on the trading session. Bitcoin did break around underneath 100K down to around 97.5. Still has a lot of work to do there. The bullish percent index for the NASDAQ composite is showing a bullish divergence starting to build, right? If this starts to break lower and this still remains, higher, that would be a small bullish divergence. So we'll continue to watch that one. I wanted to give the updated chart here from Nicholas that is out there on Twitter or on X, and it's just showing kind of his cycle chart, which I still find it kind of cool because as we were getting this selling, I saw this, and then we came into our lower implied vol moves, which is just a great opportunity to potentially, put more ideals in your favor. And you can see then we followed through to the upside, and now we're moving into the period where we start to sell off. And you can see we're actually going to be blocking these days. So there's going to be one more candle, right? One more candle here, and then come next week, perhaps next week rips up into, another weekend over here. And then it looks like, hey, maybe there could be some more sell side activity, after we see a bit bump up, maybe, I don't know if it's going to play out. And then more towards the end of November 25th-ish, you see quite the rally take place. So we'll see if that plays out. So far, it's been doing pretty well. Okay, let's look at the mega cap stocks and see what the updates look like. Now, if you watched yesterday's video, this was the chart, what it looked like. We made some commentary there. This is the updated chart. What did Apple do? It's just consolidating above a rising 5-day. It looks pretty healthy. So if we start breaking above this, I would think that we go right back to 275, right? If we start breaking below it, you have potential problems, right? If we break under those levels. Microsoft looked like this. We said wait to see if it comes back within its weekly implied move, see if it could consolidate. What did it do? Came back into its weekly implied move. It's currently at the low VWAP, just under it, and the 5-day moving average. So what you want to see is more time kind of go sideways and then eventually try to go and break this VWAP here. So right now it's just consolidating there in Microsoft. As far as NVIDIA goes, this is what it looked like. And we said, if you're long right now, awesome, you can play it up, but you better be cautious if you start breaking under here. Well, the updated chart, bam, we broke under, cracked significantly lower, filled the gap, and started to bounce back a little bit at the end of the trading session, but we're still below that declining 5-day moving average. Google looked like this. I said this one probably just put on hold, right? It's just in a consolidation, needs some more time after a big run up. This is what it looks like now. It's basically at the lower portion of this range, still consolidating in an overall bullish context. Amazon looked like this, and I was thinking, hey, you know, if we could come down more to these levels, it would look like more just like a flag. And today, well, it did come down into these levels. It came down to its October low VWAP, which is pretty significant low, and we're near that lower weekly implied move. I would love to see it down here, and then I would even establish maybe a small position to start and then see if it shapes up to add into it. But we're getting some interesting news here in the very near future that may and may not impact Amazon, right? We have the tariff news that, I mean, they did their oral argument in the Supreme Court, and we should be hearing a resolution maybe this year, maybe early next year. But if they strike down, these tariffs and they're unlawful, maybe that perhaps helps names that have been impacted by tariffs. We'll see, right? I don't know if Amazon falls within that category. I would imagine it would. There's a lot of things from overseas that are placed in Amazon. So yeah, we'll continue to monitor that and watch it and see if it shapes up. But if you're bullish Amazon, you look for moves like this. You look for moves down to lower weekly implied moves so you can scale in. Tesla looked like this, looked pretty weak, looking for a lower tag of the lower weekly. This is what it did, came right into the lower weekly. We kind of doodled around. During the live stream, we were talking about how, if you buy underneath the weekly, maybe look for a tag back up to the daily. That's exactly what it did. The daily VWAP's not on my chart, but it did come back up to it. So Tesla got quite the burner there. It's extended from the 5-day. So if we get a strong move down, I would still be looking for potential little bounce in opportunities with Tesla if you're bullish. But today was a quite substantial break from the daily perspective. I don't have that chart in front of me. Meta looked like this, and I was thinking that we can break this, but we didn't do anything in Meta. It went sideways. It was slightly up on the trading session. I was hoping to get a faster break. We're still below a declining 5-day moving average. Hey, maybe we shape up. Maybe it firms up a little bit, but overall it did not do much. That's all I got for you on today's episode, everybody. Hope it helps out, give you some insight into these markets. I'll see you on the next.